In this video, let's talk about what is the latest state of the housing market, in which cities will housing prices likely drop first, and in which cities can we potentially experience continued increase in housing prices as well. But before I get too far into it, don't forget to smash the like button for the YouTube algorithm, subscribe to the channel, ring that notification bell, and let's get into it. So let's start off with what's the latest data around the housing market. So the housing market is continuing to experience some cracks in the foundation. This is primarily being driven by rising interest rates, as in 30-year mortgage continues to increase over 5.5%. Now I understand there's been some amount of leveling out over the last couple of weeks. One can safely expect to see the housing market rate with a 30-year mortgage to continue to increase as the Fed funds is expected to increase by 100 basis points over the next 2 months. Even if inflation pares back a little bit over the next couple of months, the Fed is still expected to reduce the size of its balance sheet, and the Fed is determined to reduce the amount of consumer demand in the open marketplace in order to continue to reduce the amount of inflation to that 2% level. So what's the outcome of rising rates? Well, for one, there is an increase in the amount of supply of homes that are entering the market, and this is largely due to the fact, and it's purely psychological albeit, that people are trying to get in before the market starts cooling down quite significantly. Make hay when the sun shines, if you will. Supply of homes jumped up 9% in the last week compared to the same week a year ago. Now, by no means am I saying that this little increase in the amount of supply in the marketplace is going to alleviate some of the overarching shortage that is continuing to be experienced in the housing sector, but as I've discussed in other videos, every little bit helps. The rising interest rates is also impacting the amount of pending home sales that is being reported. Pending home sales dropped 4% in April, month over month, and is a 9% decline in year-over-year data. It's the 6th straight month of pending home sales decline. So yes, at this point it is absolutely a trend. The rising rates and absurd property valuations has more and more people bowing out of the housing market. This, combined with the threat of a recession, potential job losses, increased prices for services and gasoline, and a deteriorating stock market, has put consumers in a precarious spot, all of which are impacting the housing market. While homes are continuing to receive multiple offers or bidding wars, if you will, the number of participants in each of those bidding wars has also come down precipitously. And of course, this isn't just for existing homes. This whole fact pattern is also true for the amount of new homes that are being built. Sales of newly built homes tumbled by about 16%, even though prices continue to go up. Overarchingly, weekly housing demand for mortgages has tumbled by 12% week over week. As for the refinance market, well, you can basically forget about that because nobody should be refinancing in this marketplace, and that is exactly what the data suggests as well. But with all of that said, the prices for homes continues to increase, at least for now. But one thing that is always true for the housing market is that prices are considered to be a bit of a laggard. Only after there is a significant decline in the amount of demand will there be some level of reduction in the house prices. The bigger question, of course, is how long is this going to take? Most economists, financial pundits have already started to seeing a decline in the pace with which home prices have been going up. And most of these folks do expect to see some level of leveling out in Q3 and Q4 of 2022. This particularly in this marketplace where homes are languishing for extended periods of time. There was a brief period there where houses were receiving multiple offers pretty much on the date that they were put on the marketplace in the first place. But now we're starting to see more and more homes that are starting to be in the market for a couple of weeks, 3 weeks, 4 weeks, 5 weeks. And of course, it largely depends on the market which these houses are in, and of course the price point with which these houses are also listed at. The next question becomes is, in which cities can we continue to expect to see prices to keep going up? And in which cities can we expect the prices of homes to start coming down in the not too distant future? So in real estate, the most important thing, as is commonly said, is location matters. Highly desirable locations, or locations that people specifically want to get to, will continue to experience a rise in home prices, particularly in this environment that we're in, where there is a significant amount of supply-demand imbalance in the United States. One way to assess the amount of demand is by looking at migratory patterns amongst people. Which cities are people migrating from, and where are they migrating to? The cities that they're migrating to will likely experience some level of increase in home prices for the foreseeable future, for that matter. Cities experiencing the most growth include various cities in Florida such as Sarasota, Orlando, and Tampa Bay. Other cities such as Dallas, Nashville, Myrtle Beach, Wilmington, Knoxville, Atlanta, and Phoenix are also experiencing significant housing shortage due to these migratory patterns. There's a variety of different reasons why people are moving to these cities. Some of it may have to do with the climate, some of these may have to do with the tax environment in these cities, some of these may have to do with the cities that they're currently living in having ridiculously high home prices, and these cities are actually offering a more tolerable housing price for these folks. It could be a variety of different reasons, but no matter what, these are the cities that are experiencing an increase in the number of people that are migrating to them. And then on the other side of the coin, there are cities such as Los Angeles, San Francisco, Chicago, New Jersey, Seattle, and Washington, D.C., which continue to experience the other side of that equation, which is people are leaving these cities. Generally speaking, one would expect these cities to start also experiencing the most level of normalization or reduction in housing prices just purely based on people's migratory fact pattern. These are all pretty big cities, okay? And as more and more employers are starting to open the doors and asking people to come in, so on and so forth, it'll be interesting to see where people end up in a lot of these cities. But for now, at least, people are walking away from these cities, and that is what is going to result in some level of normalization in housing prices. Now, perhaps the most interesting one for me was, of course, seeing San Francisco on this list. Property values in San Francisco and the outlying areas have experienced some of the highest increases in housing prices over the last decade. And this is largely being driven by the tech boom. However, with tech stocks retreating rapidly as interest rates continue to rise, more layoffs being discussed publicly, and the increase in the number of floundering startups in the Bay Area, the dynamics of what will become of the San Francisco housing market will be very interesting to see. There is also an interesting thing to note here because, as I mentioned, Texas as a state is receiving a large number of people from San Francisco and from the California state, to which Texas is of course experiencing, particularly in the Dallas-Fort Worth, Austin, Houston areas, a significant amount of new people coming in, which is also driving up their home prices. Anyway, now it's up to you. Which cities do you expect to see will experience the largest level of normalization when it comes to housing prices? Include all of that in the comments below, and if you've made it this far, don't forget to like and subscribe, and I will see you in the next one.